Welcome back, everyone. Jake here. In this video, we're going to talk about Russia's sovereign debt defaults that occurred this week and what does this mean for the war in Ukraine, because this is a pretty big deal. Russia has officially defaulted on their foreign debt as a 30-day grace period has expired. This is according to the rating agency Moody's, which is the official source when a government defaults on their foreign debt. Russia was supposed to make interest payments totaling $100 million by May 27th. There was then a 30-day grace period into June, and of course, Russia did not make the payments. And this is a very unique situation, perhaps the first time in history, that a government has the money and wants to make the payments on their foreign debt, but they're physically being blocked and unable to do so. This is the situation right now for Vladimir Putin. The reason why is when the war kicked off, EU kicked 7 of Russia's banks out of the SWIFT payment network. There's only a few financial systems that can handle transactions in the hundreds of millions or even billions of dollars. Additionally, the United States Treasury is just blocking Russia from making payments to bondholders in the West as part of their economic sanctions on Russia. So let's rewind back to February and quickly explain what exactly happened. And in the first week of the war, after Russia invaded Ukraine, the United States allowed for a 90-day loophole in which Russia could continue making their debt payments to bondholders in Western countries. I think that a lot of people in the West were just hoping perhaps this war would be concluded in less than 3 months and payments officially would not have to be stopped. However, the 90-day loophole came and went. There was then a 30-day grace period. We're now farther than 4 months into this war, and anybody holding Russian debt is no longer going to be receiving payments. Now, Russia and Vladimir Putin, they dispute this. They say that they're still making the payments and the money is sitting in Russian bank accounts. It's just Western governments that is blocking the transaction from going through. So Russia is arguing that they're not in default, that they are still making payments. They're still depositing rubles in this account, but the ruble is not being converted into dollars or euros and then being sent to the bondholders. And Vladimir Putin really cares about this issue. He signed a presidential decree, once again saying that he is servicing all of his debt. The money is in the account. He's still making the payments. It's the West's fault that bondholders are not receiving it. Okay, let's answer a few questions and then explain what is the impact potentially on the war in Ukraine. And the first question you might have is, why does Russia have any debt to begin with? And Russia's debt levels is actually pretty low compared to other countries. When you look at their debt to GDP ratio, it's pretty small. And the reason why governments in general might want to raise debt is because you can get a lot of money instantly, for example, for an infrastructure positive. Let's use fake numbers and say that Russia's government, because of their exports, is cash flow positive by $500 million a month. And they need $5 billion for an infrastructure project. Yes, they could wait 10 months to save up money in order to fund the project, or they could just go to the debt markets, the bond market, and get all the money they need today. Another good reason why Russia has been issuing foreign debt is when they partner with Western corporations, those corporations want to be paid in their local currency, and they don't want to have to worry about transaction costs converting rubles to dollars or rubles to euros. So if a Russian energy corporation partners, for example, with ExxonMobil, ExxonMobil is going to want to know that they're going to be paid in US dollars. So what Russia will do is they'll issue government debt in dollars per contract partnering with a Western corporation, and then no one ever has to worry about the exchange rate with rubles. The money is guaranteed in dollars. The same is true for euros. Once again, if Russia is partnering with any European Union corporations. The final reason is that just maintaining a small amount of debt is good for your reputation in the global markets. You want to basically have a good credit score, a good credit rating, so that if the country or the government or the world heads into a recession, you can tap those bond markets to keep government services going, keep your government going when there's an economic downturn. Next question you might have is, what do the bond investors, the bond holders, think of all of these economic sanctions? And generally, the coupon rates, the percentage you're receiving on the debt, increases with the risk of the bond perhaps not being repaid. So a country like Venezuela or Pakistan, the interest rate they're going to have to pay for issuing debt is going to be much higher because there's a higher risk potentially of default. Prior to last year, I'm pretty confident the risk that bond investors were pricing in of Russia defaulting on their debt was relatively low. Russia was a powerhouse of exporting energy and commodities. I don't think bondholders were assessing the potential risk of Russia invading Ukraine and then economic sanctions being placed on the country. So normally, bond investors only have to worry about legal protections and the rule of law in the country. Let's say there's a change in government or there's a revolution. Is the new government going to honor the debt of the previous governments and continue making payments? This is the most frequent way that bond investors don't get paid in bond history. However, bond investors now have to worry about economic sanctions from their own governments blocking the payments. This is the lesson that the world is learning right now. So if you're a bond investor and a country like China or India or Brazil potentially is asking for money, you're now going to have to assess that risk, that if they get sucked into some kind of military conflict and economic sanctions are placed on them, is there a possibility that as the bond issuer, you won't get paid? And I'm actually pretty confident that anybody holding Russian debt actually will be paid. This is how stupid Russia is, but Russia, the last 8 years, was saving up enough money to fight this war and survive economic sanctions. Vladimir Putin had about $600 billion saved up, but $300 billion of it was being held in Western banks. So the first week of the war, Western banks seized and froze all of these accounts. They're currently holding on to that money. So what's going to happen, I think, with these bond investors is that once Russia officially goes into default, these bond investors are going to have to go to an international court, go through the legal process, and then petition to be repaid from these frozen assets from Russia. So $300 billion is a lot of money. It can easily cover all of Russia's foreign debt that they're now defaulted on. Additionally, I think this $300 billion, once again, there's got to be court cases, a court ruling. This could take years, but eventually this money will be unfrozen and then probably used to rebuild Ukraine after the war. So what exactly is the West doing by stopping these payments to their own citizens, bondholders? And they're attempting to destroy Russia and Vladimir Putin's reputation. In effect, economically, financially, don't do business with Russia. That is the message that Western leaders and the G7 specifically are trying to explain to the world. So they're trying to scare away Western bond investors not only from the Russian government, but from Russian corporations. This default is occurring on government debts, but there are lots of Russian corporations that, for whatever reason, might need to issue debt to expand operations and economically propel the Russian economy forward. But I don't know why anyone in a Western country would risk their money issuing debt to a Russian corporation with all of these economic sanctions, with the war going on, with all this uncertainty. The final reason, and this is actually pretty genius, is they're attempting to squeeze Russia financially with the remaining countries still willing to do business with Russia. So we'll talk about that in a second, but here's a very interesting infographic of who in the world has been loaning money to Russia. Italy has about 25 billion, France 25 billion, Austria, the United States, Japan, Germany, Netherlands, and Switzerland. And once again, this is not a lot of money. Italy and France is not going to be struggling if these bonds are not repaid potentially for a couple years. But just look at the lists. Look at the list of people willing to invest in, willing to do business with Russia. I don't see India, I don't see China, I don't see Brazil, I don't see Turkey. So what's happening here is that Western countries are the ones that were willing to give favorable interest rates to issue debt to Russia. So I don't know what the interest rates were, maybe 3, 4, 5, 6%, something really low. But if Russia gets desperate and they need to ask China for money, or India for money, or Brazil for money, then China, India, or Brazil is going to say, yeah, we'll loan you money, but you've got to give us an interest rate of 10, 11, 12, 13, 14, maybe even 15%. And that's ultimately what's happening right now between friends. Russia was really hoping that India and China would come to their defense, or at least economically keep them afloat while they fight this war. But that's not what's been happening. Yes, I wish that China and India were participating in the economic sanctions, but China and India are actually doing the next best thing. China continues to snap up Russian coal at steep discounts. Because Western countries won't buy it, China is telling Russia, we'll only take your exports if you give us a 20 or 30% discounts. India is snapping up cheap Russian oil, once again because the West won't touch it. India is telling Russia, we'll only buy your exports if you give us a 20 or 30% discount. India and China right now are ripping Russia off. They are literally stealing food out of the mouths of Russian soldiers fighting on the front lines in Ukraine. In effect, they're just being opportunists, and I understand their arguments that they need to do what is best for India, they need to do what is best for China, but that isn't what Russia was hoping would happen when the war broke out 4 months ago. And to illustrate how desperate or how bizarre it is getting for Russia, here's an article from March in which gold bricks spilled all over a Russian runway after a plane door basically busted open. And there's actually a video on YouTube of this occurring where a plane carrying 9 tons worth of gold bricks, gold is very heavy, it busted through the side of the plane and it spilled all over the runway. So what the heck is going on here? And what is going on here is that Russia is manipulating their own currency. So India and China don't want rubles. They don't trust the value of the currency. Nobody in Western countries wants to trade or deal in rubles. So in order to buy stuff, in order for Russia to buy Indian exports, Chinese exports to Russia, these two countries are demanding payment in gold. They're only trusting Russia if they deliver with physical gold. So the relationship between these three countries, what's going on economically, is pretty fascinating. So let's now pivot and talk about the war map, because the day-to-day fighting, I understand, to the soldiers on the ground, every hill, every river, every tree matters as far as maintaining momentum and maintaining the fight. But I really think this war is going to be won or lost for Russia economically. So this is the war map, guys. This is the war map that I personally am checking every day. And this is the price of crude oil. Currently, oil is $109 a barrel. And to bankrupt Russia, to completely decimate their economic production and output, to halt all their forces on the ground, we need the price of energy to go back down to about $50 or $60 a barrel. And we were just there in 2019, so this is very doable if we can either increase energy production or decrease global demand. And this is what is happening to get inflation under control. Western banks are raising interest rates to kill consumer demand. In effect, we're triggering a global recession, and the country least equipped to survive a global recession now, because they can't raise money, they can't issue debt from the global bond markets, is Russia. This is going to hurt them 6 months from now when the price of energy comes down. Because remember, China and India are ripping Russia off. So if the fair market value that Western countries are paying for oil is about $50, what is Russia and India going to demand as a discount price to Russia when we get to this point? Potentially, once again, 20%, so maybe they'll only be willing to pay 40. This is not going to play out well for Russia in the near term, in the near future. So that is where we're at, guys. I think it's all pretty fascinating how this economically is playing out, and how economically this is how the West plans to defeat Russia. Unfortunately for the Ukrainian forces on the ground, this is just going to take more time, potentially another 6 months or a year, but a day of reckoning is coming for Russia. Okay, everyone, if you found this video informative, give me a thumbs up. Really helps out with the channel. If you have any comments or questions, or know something I don't, let me know down below. I love hearing from you guys. Till the next video, take care, be safe.